Swaminathan Aiyar, consulting editor at ET Now, joins in on the show right now. Swami, so great to have you on the show today, and it seems like 27th is here. And unless something really comes about in the next 2 days, the 50% tariffs are going to be slapped on India. Tell me, are the markets, you think, now geared up for it? They know that 27th is going to happen and there's no running away from it.
In the short term, perhaps there will be something to the markets. But I find that the markets tend to see through the current ups and downs of Mr. Trump and say, what is the kind of medium-term look? The markets still believe that whatever happens will get ironed out. There may be some disruptions, maybe for a quarter, maybe for 2 quarters, but ultimately they believe that these things will get ironed out. Right now, what we are seeing is, in fact, not just an economic thing. It's very clearly a geopolitical issue. Mr. Trump is trying to hurt Russia by hurting India. Because India is a large buyer of crude and has refused to give way to American threats, they are doubling up and saying we are going to penalize India for insisting it's going to continue to buy Russian crude. So this is no longer just a tariff issue, it's become a foreign policy issue. But I would say India on its own hand will say, look, there is no way we are going to cut our ties with Russia. We will have a balancing. We want good relations with the USA, but also with Russia. We are therefore going to continue to buy oil from whichever is the cheapest source for us, which now happens to be Russia. And not only that, I think they are quite clear that on armaments, the Russia has long been the cheapest provider of these arms and a reliable provider of arms. When you get the situation we are seeing right now, if some country is treating us as an enemy and imposing a 50% tariff, with what confidence can we buy arms from that country? Because that country controls when we can use it and cannot use it. Is it really worthwhile buying American arms where the Americans have a binding say on where you can use it and when you can use it? No, I think we would have to say that, we may or may not retaliate with high tariffs of our own. The current mood is against, I think, retaliation through high tariffs. But it will be retaliation to say, gentlemen, we cannot buy billions of dollars of aircraft from you when you are treating us as an enemy, when you are laying a 50% tariff on us when there is such a much, much lower tariff on China. What do you think you're up to? You have got a 19% tariff on Pakistan. You're putting 50% on us. What is the state of relations? Do you want India to be a friend or not? So I said, forget, this is no longer a trade issue. This is now a foreign policy issue. And I think India has decided we are going to stand firm on this, but there could be serious things going wrong for a couple of quarters. And after that, the belief is things will be sorted out. So some rough weather, stormy weather ahead, but with a general feeling that the storm will die out after a quarter or two. Let us see how things go.
Okay, Swami sir, at least that is sounding optimistic that, it's only a couple of quarters where we're anticipating some roughness and then we're expected to settle down. But Swami sir, weigh in with your perspective here. Do you think a taco trade could still play out, given that just last night Trump has threatened a 200% tariff on China? And so far there was a very rosy picture painted with China that they have agreed for the rare earth metal export and all of that. And now suddenly there's a 200% tariff coming in. So there is a lot of volatility in the way he's framing his policies. Could a reversal be seen in India?
Well, all I will say is that Mr. Trump changes his mind every day or every other day or maybe every few hours. In these circumstances, to try and analyze what he wants to do and what he will do really has become impossible. So right now he's favoring China and out of the blue he will say, I can do a 200% tariff. And he may actually do nothing at all, because there has been no increase on the tariffs. And, they say we are negotiating. And they got a 90-day extension, a 90-day extension. I was hoping that India also would get a 90-day extension. Instead, we've been served notice that it's coming on Wednesday. So all I can say is that on a number of parameters, India right now is being treated with a certain amount of American hostility. It is not even coolness, it is hostility compared with the treatment of Pakistan, compared with the treatment of China. We are really being treated very badly. And I see no reason why we should be buying armaments from a country that is so cavalier with its relationship with India. I would say we cannot trust them. And I think this message should be conveyed very, very clearly. If you think you're going to pressure us and break us, we will not break. On the other hand, if you think that you want to reduce the trade deficit by selling us more aircraft or selling us more armaments, please do not think we will buy all these things if there is an atmosphere of hostility against us. And if we find that, Pakistan and China are being favored on trade compared with us, these things are not compatible. So very basic questions: what are the relations between India and the USA? There was the Howdy Modi and whatever, the various rallies with NRIs, which led some people to think there was a great chemistry between Modi and Trump. There is nothing of the sort. Trump is an opportunist. He will seize any photo op opportunity with Narendra Modi. Narendra Modi, I suppose, will do the same. But at the end of it, this notion of personal chemistry, cementing relations between countries, must not be taken too seriously. So what we are getting right now is Mr. Trump wanted to dig in his heels. And I think Mr. Modi, quite rightly, digging in his heels too. We have not gone to the stage of retaliation through a higher tariff because right now there is no formal tariff yet. But I see no reason why we cannot go ahead and do so. Please remember that in Trump's first term, when he imposed these various duties on aluminum, steel, we did retaliate. We put duties on 28 American items. It has been done before. It can be done again. It will be taken as a sign of India getting tough. And I would say, yes, I think it's time we go tough. I think it's time we show we are not going to buckle down. And once it's clear that we are not going to buckle down, I think at that point, Mr. Trump will then say, okay, let me settle for what I can get instead of what I want. So, when you look at relations overall, this guy keeps changing his mind. I cannot believe that he seriously wants to convert India into a long-term enemy. So I do believe that, within a quarter or two, things will get sorted out. But who knows? This is a man who apparently holds personal grudges very, very deeply. And if that is the case, that may come in the way of the two countries' relations. I hope that does not happen. But we now stand warned that earlier they were saying Trump always chickens out. But I'm afraid there are some occasions when he does not chicken out. And he's putting the screws on us. Let us stand up firmly.
Yeah, absolutely. And Swami, I also feel that India has that big weapon, or Brahmastra, as everyone is calling it here. I mean, we're the largest supplier of US generics. We could too tighten that supply.
I think we can be substituted on most items, some more, some less. As far as the generic drugs are concerned, let us see what happens on a few days now, because he's threatening to put enormous duties on generic drugs in order to revive manufacturing within the USA. If that happens, it's not going to be pretty for us. On the other hand, if everybody is hit with the same tariff, then we will not be disadvantaged compared with other people, and we will be able to scrape through on that particular front. But to say that let me not supply, various other people will manage to supply. If nothing else, they will just buy drugs from India and then divert it once again to the USA, which may be okay for us. Our drugs will be shown as going somewhere else. The markets are very good at this. The markets are very good at evading formal barriers of various kinds. So I would say, even if we cannot threaten to say, I will not send any drugs there. It will be like ruining our own industry, ruining our reputation. We should not do that. But let us see what Mr. Trump does in regard to putting up very, very high duties of up to 100% on Indian drugs. Where we can retaliate, is on intellectual property on drugs. If we say, if this continues, we are going to more freely give compulsory licenses on patented drugs of American companies. That is certainly one way in which we can put the squeeze, and it would be within the WTO norms. He may counter again, so you have to watch your steps. So I do not think we can get him on generic drugs. We do have a lever insofar as intellectual property rights. We can make licensing, we can make patents a little more difficult for American companies, and we can certainly make compulsory licensing much easier for Indian companies to the detriment of American drug companies. Let's see how it goes.
Okay, so that's the take coming in on this entire tariff situation and the way it's unfolding. We have Geoff Dennis, independent emerging markets commentator, also joining us. Thanks for your time. Give us a sense of now what happens to India's trade policy. Does it create more blocks, or does it improve the relation that we have with BRICS, with ASEAN? And is how much of a major rerouting do you see outside of US trade markets into other global markets from India?
I agree very much with what your last speaker said. I mean, first of all, although it's very clear that Trump does not always deliver on his tariff threats, I think the chances of there being 200% tariff on China is very, very low. But he does seem to want to go through with the Indian tariffs and Indian imports from India at 50%. And I think that is something which he's determined to do because, as your speaker said previously, they're trying to put the squeeze on Russia, and Russia's selling cheap oil to India. Now, what India, I think, should be doing is indeed continuing to talk to the US so that we can see if we can get these tariffs reduced. But meanwhile, I think India is going to really work hard to improve its trade relations with a number of other areas of the world, Europe, the UK as well, of course, and other parts of Asia. And I think ultimately, we must expect that the US will follow through, and I think that's going to handicap, as I say, trade with the US. But I think we'll see some development with other partners around the world, particularly locally in the region, and as I say, in Europe.
That's the other thing, right, Swami sir? Because while the tariff situation with US is still a work in progress and the government clearly is preparing for the worst case. But on the other hand, you've got China relations also normalizing. It's a part of course, ongoing process. And the renewed reform push from the government said, GST rationalization, rate cuts which are going to trickle in, the pay commission impact as well. And it seems like more rate cuts very well could be in the offing too.
Sorry, the reception is bad. I couldn't hear that.
No, I just wanted to understand that while the tariffs with the US is an ongoing situation, but on the other hand, the government is not really concerned on growth because, they're firing all bazookas, be it GST rationalization, be it the rate cut cycle by the RBI. It seems like they're trying to cushion the domestic demand and the domestic economy in any case.
I do not think the domestic economy can absorb more than a very small part of what is being exported to the United States. I mean, the domestic market is already well supplied. It's not as though there are great shortages that can be diverted from America to here. So you can try to increase the demand. I mean, the budget went ahead and gave this huge tax cut or raising the tax exemption limit to 1 lakh a month, and hoping that this will give a boost to demand. And we have seen the impact of that. It has been modest, not very much. And can it be done very much more? What will you do? Will you cut taxes once again, affecting the fiscal deficit? What will you do on, you will cut the interest rate by 25 basis points? I do not think that is going to compensate for the loss of American trade. So we will do what we can. We have some flexibilities. We will try and make effective. But at the end of it, we will be hit. Let's be very clear about it. The exports to the USA are about 2% of GDP. It is not a negligible figure. It is a significant figure. The only good thing is that given the way that international markets work, if something is affected in the USA, we may well find ourselves exporting to God knows, to Dubai or to Singapore or somewhere, and from where it would deviously be rerouted to all the markets, and we will not really suffer that much. That is the kind of thing that has been happening. So perhaps we will not be very seriously hit, but there will be a hit. Let us be very clear about it. And if Mr. Trump's mood is not right, he can raise this further. He can raise the stakes further. There is very little America has to lose. So he's capable of doing this further. I would hope it won't happen. I would hope over the next 2 quarters this will be sorted out.
Right, Swami sir, our fingers are crossed on the same. Thanks so much for joining us this morning, and thanks so much for your thoughts as well.
Okay.
Well, Geoff, let's take that conversation ahead. And as Swami sir was just making the point, right? This no longer seems like an economic issue or a negotiation issue. This now seems like a foreign policy or a trade issue. Now, the initial rationale of putting so much tariff on India was to pressurize Russia. But now that India seems to be bearing the entire brunt of this, do you believe that this is just a strategy gone wrong from Trump's end, and this pressure is justified on India? And how do all the other emerging markets come into play over here now that India is set behind by 50% when it comes to tariffs?
Certainly, it's a setback for India, I think, in relative terms to other emerging markets. And we're seeing that in terms of the performance of India this year compared to other EM. For example, India's up, according to MSCI, about 2% in dollar terms this year, whereas Korea's up 40%. China's up over 20%, for example. Now, I think the previous speaker was right. This is not an economic issue. It's a political issue and a foreign policy issue, because what Trump is trying to do is to squeeze Russia. And if India continues to buy Russian oil, which I'm sure it will, and it's increased its purchases of Russian oil quite significantly over the last 3 to 4 years, I think the 50% tariffs will kick in, and they will stay for a period of time. And I think India will have to adjust its economic policy accordingly. It may not, though, be the sort of thing that foreign investors really want to be too excited about when perhaps there are other countries where tariffs would be lower. Now, having said that, I think India is going to cut rates. I think the move on GST is very helpful. The lower oil prices themselves are helpful, of course, for India. And a market like Brazil, which has also got 50% tariffs, is doing very well this year, up over 20%. And so I think if India sticks to its guns on the purchasing oil from Russia, and you see these various other internal developments, I think the market will do reasonably well over the medium term. But it is now in the hands of geopolitics and foreign policy. It's no longer an economic issue, and I agree on that point very, very clearly.
Yeah, absolutely. Geoff, wondering though, what's keeping the FII still away from the India equity markets? Because even if I look at the year-to-date figures, when tariffs weren't such a key issue, they've been consistently selling India.
I think it's partly because China, I think, has surprised people. We've got to the point, I think, and have been for some time, where investors have been looking, FII investors perhaps in particular, having a look at India versus China. It's become one of these perennial debates. And I think one advantage China's got over India is, of course, relative valuation. Now, I'm not a big fan of the Chinese market here. I think the economy is in a considerable amount of trouble. It's probably growing nowhere near 5%. The property market's still a drag. The switch towards consumer spending is really not working. But I think that's what's causing a lot of investors to push towards China as opposed to India, where, of course, as we all know, valuations are much higher. But I will reiterate the point I said a few moments ago. There's a lot of good stuff going on in India. GDP growth is good and reasonably stable. Interest rates are going to come down a little bit more, I think. You've got the GST tax changes, and you've got the benefits for inflation from lower oil prices. So I think eventually the FII investors will come around, but I think that's really why this has been going on this year, that there's been a lot of movement back into China.
Understood. But Geoff, so good having you on the show today. Thanks for your time.
Thank you.
We are